Pop quiz. Which tax is usually seen as more fair? A tax where everyone pays the same dollar amount? A tax where everyone pays the same percentage? Or a tax where higher incomes face higher rates? Choose your answer, and we will come back to it once we see what makes a tax system work. In this video, you will learn what a tax is, what economists look for in a good tax system, and why every tax design involves trade-offs. A tax is money the government requires people or groups to pay. That money helps fund public goods and services, like roads, schools, and emergency services. A tax system is the full setup for collecting those taxes and, in some cases, sending support back out through government programs. A tax system is often judged on four big ideas: efficiency, equity, transparency, and convenience. Think of these as four questions. Does it raise money without causing too many problems? Does it feel fair? Can people tell what they owe? And is it easy to pay? First, efficiency. An efficient tax system brings in the money a government needs without disrupting choices more than necessary. Some taxes can change behavior. For example, if a tax lowers what workers keep from each extra hour of work, some people may decide working more is less worth it. But not every change in behavior is a bad thing. Some taxes are designed to discourage harmful activity, like smoking or pollution. Those taxes are different from ordinary revenue taxes because their goal is not just to raise money. Their goal is also to push behavior in a healthier or less damaging direction. Next is equity or fairness. Fairness can mean different things in different places and times, but one common idea is ability to pay. In plain language, a fair tax system should recognize that losing the same amount of money does not hurt everyone equally. Here is one way to think about that. A broad tax that helps fund elementary schools may feel fair to many people because the whole community benefits when children learn basic skills. But people may disagree more when the same kind of tax pays for a narrower benefit that does not reach everyone in the same way. Here is a common misconception. Fair does not always mean identical. If two people both lose the same share or the same dollar amount, the impact on their lives may be very different. That is why equity debates usually focus on burden, not just arithmetic. So far, we have covered what taxes do, why efficiency matters, and why equity is really a question about how the burden feels across different taxpayers. Ready to lock it in? Tap the link for study guides and flashcards on this topic, so you can keep learning without missing a beat. Now let us add two more goals. Transparency means people can reasonably predict what they owe. Convenience means taxes are easy to calculate, report, and pay. A system loses points when the rules are confusing, the amount changes in unpredictable ways, or filing becomes a maze. Tax systems use different tax structures. A lump sum tax is the same dollar amount for everyone. A proportional tax uses the same rate for everyone. A progressive tax applies higher rates to higher incomes. And a regressive tax places more burden on lower income people relative to what they have. Imagine a business registration fee. Every new business might pay the same flat amount to register. That is simple, but it hits a tiny shop harder than a large company, which is why lump sum taxes are easy to administer, yet often raise fairness concerns. Now consider a proportional tax, such as a property tax charged at the same rate. A more expensive home pays more dollars, but the percentage stays the same. That makes the rule easy to understand, though people still debate whether equal rates always produce fair outcomes. Back to the pop quiz. The answer most people associate with greater fairness is the tax where higher incomes face higher rates. That is a progressive tax. The reason is not that it is automatically perfect, but that it usually fits the idea that people with more ability to pay can shoulder more of the burden. That brings us to a common regressive effect. A sales tax on everyday purchases applies the same rate at the register no matter who is buying, but the same extra cost on basic goods usually takes up a bigger share of a low-income shopper's budget than a high-income shopper's budget. So why not make every purchase tax perfectly matched to each person's income? Because that would be hard to run in real time. This is where the trade-off appears clearly. A simpler system may be easier and cheaper to administer, but less fair in its effects. Here is a simple way to think through any tax question. First, ask what is being taxed, like income, property, spending, or pollution. Next, ask who really bears the burden. Then ask whether the tax changes behavior in a helpful or harmful way. Finally, ask whether people can understand it and pay for it without too much hassle. To recap, taxes fund government activity, but a good tax system is not judged by revenue alone. It also has to balance efficiency, fairness, transparency, and convenience, and every real system makes trade-offs between those goals. Now that you've watched the video, let's see how much you remember. Head to the link in the description where you'll find Quizlet content made just for you.